Thank you for joining me. I'm Alex, and I want to talk about Ford today, and that for two reasons. Number one, it actually dropped to $5, and I figure it's time to check if that is a bargain or not. And number two is, I actually had a look at this stock before, and it was in July, and it's been a while. So, kind of wanted to see where things are going and if things are going up and or down, and whether or not they are a great investment or not so much. So as you can see, the stock market has been on a bit of a sale with the highest point drop ever, which comes after the highest point drop ever a few days ago. It's been a bad year. So Ford makes cars and trucks, if you didn't know, and current price is $5.01. They were at exactly $5. That was their low, but picked up a penny, so it's not all that bad. Current market cap just under $20 billion, and less than a year ago they were worth more than Tesla, so not going so great. Dividend yield 10.6% with a payout ratio of 6,000%. So basically they make about a penny per share, and they pay about 60 pennies per share, so they pay 60 times what they make. But that is obviously temporary because the PE is 501, so they make a penny and the stock is worth 501 pennies. Forward PE of 6 obviously isn't looking so terrible. Forward PE of 6 is actually pretty good, even for a car manufacturer, and even in this time. As you can see, the earnings are down 99%-ish, and that must be temporary. And obviously it looks like they're getting back to basically where it was before, which would give them PE of 6. So revenue is still $156 billion, which is slightly down, but that's like 2%, so it's not huge. It's just that the bottom line is down slightly more. Total assets $259 billion. Total liabilities $225 billion, which gives them a total stockholders' equity of $33 billion, which is down. I can't math. 10%. 10%. Yeah. So obviously things are not going in the right direction right now. Obviously, forward PE is pretty decent, which means that they're expecting, or Reuters is expecting, that things are going back up. And the major problem that I have with Ford is that they're not really putting a whole lot of effort into electric vehicles, and that will end up costing them. The question is how much it will cost them, and I would say that if they're not ready to make some major investments right now, then I don't think they're going to live too long. So for that reason, I really don't want to invest in Ford myself, but if you believe in the future of this company, and I wouldn't blame you that much if you did. The Ford F-150 definitely a bestseller among the trucks, and I don't expect that to change in the next few years. But me personally, I think that the future is definitely electric, and they have kind of missed the boat, which is a problem for me. And so I will not be investing in that. But overall, for a dividend investor, if you believe that they'll be around in 10 years, I think that dividend yield of 10% with a historically very solid company is definitely nothing terrible. The payout ratio, if they have a forward P of 6, is not terrible. It's definitely up there, but they could afford it. They could afford the dividend, and they could afford it for quite a while. But it all depends on where you think they'll be in a few years. So that is kind of the problem that you're going to have to figure out yourself. For a value investor, I wouldn't like the shrinking revenue, and I wouldn't really like the balance sheet. but the forward P is pretty decent. The dividend is pretty decent, and overall, the history of the company is obviously pretty nice. So, wouldn't blame a value investor investing in this, but I really don't think a value investor should invest in this at this point. Obviously, growth investors are out because there's no growth. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.